All right, Robschild here. Sorry for the delay. I'm trying to figure out how to stream through OBS Studio, and it won't let me. And then YouTube doesn't exactly make it easy to do this. Anyway, wanted to do a live stream this morning because there's a lot of exciting things happening this morning, obviously. So here's what we'll do. I'll do a screen share. Okay, you know what? I'm going to take this over here. Oh, I'm watching myself now. Oh, here we go. Hold on. All right, sorry for the delay again. A lot of data coming in. Okay, now I can see what you guys see. So that's good. So yeah, as you can see, the initial jobless claims, it comes out in 6 minutes from now. They finally fixed this number. It was funny because I was thinking, like, is this a Freudian slip? They had this expected number with an extra digit here, making it look like 2.5 million expected initial claims. Again, once we start creeping towards 300,000, or we get there or get above there, that's when we really know things are hitting the fan. And then, yeah, so the CPI came off cool yesterday and the stock market went up. The reason that stocks went back down yesterday was around 130. And this is when it hit in the news that basically the United States started pulling. This is getting sticky. This isn't the greatest stream. Anyway, sorry if this is a little laggy. Anyway, so the United States is pulling non-essential people from the Middle East, and so people are like, uh-oh, I guess the idea here is that Iran really wants to have their own nuclear arsenal, and there's an argument between U.S. and its allies versus Iran. And I guess Russia's getting involved. Anyway, whenever there's any tension in the Middle East, oil rises, and that's exactly what happened. Middle of the day. That's why we had this major spike of oil all the way up to $69 a barrel. We've cooled off now since then. Sorry for all the coughing. That's why I don't do live streams. I do. I don't know. All right. So if we switch to, for example, the half-hour chart, you can see on U.S. oil, we had that spike yesterday, specifically 1:30, 2 o'clock, exactly when that news came out about pulling people out of the Middle East. And that's what really drove the stock market to actually start falling at the same time SPY was falling. So now the idea for most people is, okay, if PPI comes in really light, that can give some legs to the market to the upside. But the initial jobless claims is really the biggest piece for me. Again, that all comes out in 4 minutes. My favorite source of this is actually on X, or previously Twitter. Investing.com, it's not a website. What are they? Their account shows the data come out like instantaneously, but I also have the places where they actually release this information up ready to go, which is the Department of Labor for the initial claims, and then the BLS for the PPI numbers, all coming out in now 3 minutes and counting down. As it stands right now, a few interesting things going on. The dollar index breaking to the downside. I talked about in shows recently how the dollar has been winding up here, interestingly. And then yesterday, really falling here. I have this little gray line here because a chartist better than me in his 80s is saying that I follow sorry, excuse me, is saying that I hope you're getting the right audio, this mic and not that mic, but I don't know. I'll see how this all works. YouTube. Anyway, so as long as we hold above $97.68, $97.68 in the dollar, we shouldn't be continuing to go lower, but we are near there, and with all this data coming out this morning, anything can happen. It's 2 minutes now. As it stands, bonds are actually up. T-bond futures are up on the day already 0.6%. Looking like, on a closing basis, we are higher than we've been since the beginning of May. So right now, bonds are actually looking fairly bullish. Interestingly, Bitcoin looking quite a bit more bearish than it had been looking. We had this big green candle to the upside on Monday, followed by what looks like a flag. We were holding on the higher part of the 50% level of this candle here, and today just continuing straight back down. So now it's looking more like a blow off top ish looking pattern, more so like that, depending on how you look at it. If you count the pole starting from down here, we're still not 50% all the way down yet, but the angle is suspiciously fast, so it looks like Bitcoin is actually it's looking bearish to me as it stands. 1 minute before the data is released. Have some the sound. Yeah, I have a Focusrite. I got a new cable, the XLR. I got a Focusrite hooked up with a USB, but I don't know if the mic source is correct in here. Is there a way to edit this? I don't know. I rushed into it this morning because I was trying to stream straight from OBS, and it got messed up. It wouldn't work. I had it all set up perfect, and it wouldn't work. But anyway, it's 8:30, so let's take a look at what's going on. Okay, investing is not posting it yet, so let's take a look at the websites themselves. Okay, the BLS doesn't have anything yet about the producer. Here it is. Okay, so yep. So 0.1%. Believe that's lower than expectations, right? The expectation for the PPI, 0.2% on the headline, 0.3 for the core. So everyone was saying the opposite. Everybody was saying, nope, the producer side is going to be higher because of the tariff situation. I'm the only one out there talking about how, you also have to have demand. You can't just have prices magically go up and expect people to pay them if they're not going to pay them. As much as we're going to talk about how taxes play into things, it has to do with a large amount to do with supply and demand. And if you don't have the demand, then prices they don't go up so much. There's no other way to put it. Look at this, final demand, negative 0.5%. So actually, let's open this on a PDF in the meantime, see if the BLS has any update on the initial claims. I'm not seeing the initial claims yet. I'm pretty sure it's supposed to be on this website. Let's see what investing.com has. Usually they post it up right away. Here we go. Okay, yeah, higher. So 248,000. And the previous was 248,000 for the initial claims. And then I'm gonna pull another thing up here. Just continued claims. The Fed usually puts this straight up right away. continued claims, Fred. That's the one that is probably even more important, is like how many people were getting jobless. Oh my goodness, it spiked. Oh, guys, look at this. Continued claims. We're going to have a bloody day in the stock market today. I can tell you from this chart alone, look at this. Up to 2 million. Again, this is seasonally adjusted, but look at that. This is the highest it's been in 5 years. Almost 5 years. We haven't seen the continued claims this high. This is big. This is a big one. We haven't seen continued claims. Let's scroll on to the right. So you can see the right side of this chart right here. It's the highest it's been since 2021. It's spiking to the upside now. This so for us bondholders, how much you want to bet bonds are going to the darn moon right now? Let's check. Let's, refresh the page. Yeah. Yep. Bonds are at the top of this green line, and I expect it to continue higher here. And then SPY pre-market down 0.42%. So not much of a change from what the pre-market was showing. Let's just, another way to look at it is the TLT, because I think the bond futures might be actually a little delayed. It might even be 15 minutes delayed. I don't have access to the most expensive tools out there. Not yet. One day Robschild will have it all. So yeah, bonds are up. That's a significant rise for TLT in pre-market, point up almost a full percent, 0.858687%. So I want to see how metals are reacting to this too. So I don't know what silver's doing. Silver's going crazy. That's silver, right? Oh yeah, X. See, we need XAU. USD. There it is. I always get confused. The AG is the symbol for silver. AU is gold. Okay. So gold's up a little bit. What about Dr. Copper? Dr. Copper doesn't care. Not really moving here. And yeah, S&P 500 down a little bit. Bitcoin looking bearish. So with all this data drop, nothing's changing all that much from what pre-market had already pretty much been expecting. But this continued claims is the biggest news of today. I think this is going to, once markets start getting wind of what's going on in the labor market, this is a real crack in the labor market. Look at this. We've been going flat in the continued claims for a long time, since for a year. Since May of last year, we've been in between 1.8 and 1.9 million continued claims, and now we're above 1.9. And it's not like it just spiked up and went back down. This is week after week after week. Look how many weeks we have basically above 1.9 million. We have week ending May 17th, week 1, the 24th, week 2, and then week 3. So 3 weeks now in a row above 1.9 million. This isn't a one-time spike. This is a trend. This is just look at the chart. That is a very sharp move to the upside. Continued claims. So that, for me, that's the biggest news of the day. That helps my case on being bullish on bonds, especially. And then the initial claims climbing higher too. Actually, we can take a look at initial claims too as a chart. So let's put that up. So initial claims, highlighting this tail end. So yeah, this chart doesn't look as scary, but yeah, no, it's the continued claims that's the bigger one. And yeah, I mean, I think about the employment report. You have more people dropping out of the labor market and giving up on looking for jobs. You have the participation rate going up. So yeah. So is there anything else to talk about this morning? Any other change? Oh, the dollar. The dollar's dropping. We are now below that line I just talked about 5 minutes ago. So the dollar is not a fan of this news, even though the PPI is low. Yeah. So 0.1%. Final demand prices declined 0.2% in April, 0.1 in March. So I'm not sure what's making the dollar fall here. Maybe we're looking at an earlier cut from the Fed, so that takes away value of the dollar. Let's take a look at, see if I can find, oops, not care, I want core. I don't do core. Right, hold on, let's go back to the, oh, here we go. It's on investing.com. So May core PPI inflation rises 3.0%, estimated was 3.1, so lower than the expected, and also lower since September of 2024 for the core. So that's, that's not 2%, but and you can see their chart right here too, and it's been dropping recently. Certainly not just going straight up. So should be an interesting day. I'm gonna read the, oh, why not use the economic calendar? Well, it takes forever for them to update the darn thing. Look, this data, oh, it's here. They put it up. Sometimes it takes a while to get it up. So the core PPI, yeah, month over month only 0.1%. It was expected 0.3%. So there you go. And then the initial claims, yeah, same as last month, higher than expected. The continued claims released at the same time. No one, not as many people pay attention to this, but this is actually the more important number, is the continued claims in my book. Let's read some more of your comments. Oh, the high beta on Bitcoin. Okay, yeah, sure. Yeah, that's true. Yeah, and so if we get a reversal in market sentiment and stocks and everything goes up, then Bitcoin can follow. The thing is, Bitcoin often leads the stock market at this point by a little bit. 10 frames a second. Yeah, sorry. Why the early show? Yeah, it's because all this stuff coming in. Thank you for your comments. Thanks for helping. Yeah. Oh, in the 30-year bond auction. That's right, Fran. If I can take. Yeah, we'll have to see the 30-year bond auction. Anybody know what time that is? Here we go, Treasury Direct. We can take a look at that together. The 29, here it is, 29/11 month. Oh, it doesn't say what time. I don't know. Yeah, what is Powell doing? Well, the thing is, Powell, they can't front run things, especially when inflation was high, and he doesn't want to have, he doesn't want to be the guy that loses the credibility of the Fed the way that it happened in the 1970s. That's one of his greatest fears. That I think a lot of people are forgetting. Like, it was considered a huge policy mistake in the early 70s to not keep things tight enough when inflation started, rearing its head, and things got ridiculously out of control until, they said, we're going to stop this inflation at any cost, was the quote that got rates up to, 15%. To finally make it attractive enough for people to be like, okay, I'll save my money. That seems like a decent rate of return. 15% guaranteed from the U.S. government. And inflation is not high. Yeah, but it's above their target. And they want it. This is the other thing. Everybody's saying that, even the uneducated economist keeps talking, he was talking for almost a year about the same point. He kept going on how the main point he was making, was how the Federal Reserve new target was, to average a 2% or above 2% for some time. My reaction to that is yes, but an average of 2% also means that you can have it lower than 2% for some time and still be okay with that. And I think I am the only person out there that believes that the Fed at this point is not going to try to save inflation once it goes below 2% this time. I think once we're below 2%, the Fed can easily come out and say, hey, we've been above 2% for a while, and so to average 2%, we don't mind being a little bit lower than 2%. I think it's going to have more disinflationary, deflationary forces than anybody else expects. But I'm also not betting on it. The reason I'm in the T-bonds, again, is just the things are so out of whack, balance-wise, when you look at, returns of Treasury bonds compared to the valuations of stocks alone. That differentiation is just so huge. It's just such an obvious place. Once that comes into more equilibrium, that's what I'm getting out of that position. I'm not surprised Japan's 40-year bond auction was terrible. Well, their rates are still really low, right? I mean, they're nowhere. I don't think they're anywhere near 5%. Correct me if I'm wrong. It'll be released 15 minutes before 1 p.m. Oh, thank you, Frantic. I love the username. So, oh yeah, great time to go into Fartcoin. Yeah, I mean, I'm at the point now where, if everything sells off, I mean, that'll be one of the most discounted distressed assets out there, right? So potentially the highest returns once we turn the risk back on. Problem is that, nobody really knows. We never know how long greed is going to last and how long the risk dial is, turned up to max, where every dip that happens in anything is just bought up by the market like hotcakes. While we're on that side, and we've been on that side really, for the most part since COVID, really at this point. I mean, we had the 30% bear market in 2022, but the market has trained people. The more risk I take, the more money I make. The more risk I take, the more money I make. The more risk I take, the more money I make. Over and over and over again. There are times when it's the opposite, when the more risk I take, the more money I lose. The more risk I take, the more money I lose. The more risk I take, the more money I lose. We haven't seen that for a long time, very long time. Really, we haven't seen an environment that has treated, savers and bondholders with any kind of credence, I guess, for for being that way. I mean, and there are time periods when that happens. You can't ignore the fact that that will happen sometimes, and it hasn't happened for a long enough time. I think we're pretty due for that for the tables to turn, as they say. Needs to be below 2% for an extended time before he cuts. No. In fact, the first cuts from September, December, and January, I think, end of 2024, when they started the rate cutting cycle, the Fed funds rates got that 100 basis point cut. People thought it was try to affect elections. It wasn't. It had to do with the break-evens. 10-year break-even inflation rate in September dropped to 2%. The market was pricing in an average of 2% over the next 10 years from that point. That's when the Fed freaked out. And that's when they said, we need to cut fast and hard right now, is because the market is pricing right now 2% inflation. And then they cut 100, a full point. And then that expectation rose. And lately it's been going back down. It's all about, I think, the Fed, more than any other metric, is looking at the break-evens to determine what inflation really is. It's the betting market that's betting money on the average inflation. And when that expectation, goes to the upside and starts being like, oh, no, we need, we're going to pay more for Treasury protected inflation securities, the TIPS market, because we know that, inflation is going to keep going up. And, or the opposite, we don't need the TIPS as much. It literally prices inflation. I think that affects the Fed's decision more than any other metric. But it'll be interesting, like everyone keeps talking about, if we're not, everybody out there is saying, okay, if inflation is not down to 2% and the labor market is falling apart, everyone's expecting the Fed to cut aggressively. If the initial claims starts really spiking, if continued claims really starts spiking. But there's one thing that Jerome Powell has repeated in almost every meeting. If you just listen to him, he's said it so many times. He says, the goals are price stability and stable, employment. And you can't have stable employment if you don't have control of prices. He doesn't want to lose. He cannot finish his term as the Fed chair knowing that he cut before he should have cut and lost the credibility of the Federal Reserve. He won't let that happen. I think he's more of a hawk than anybody else out there believes. That's my perspective on it. Traders see 80% chance in September. Is that what's going on? I'm always confused with the CME when they actually update that. Is it live, or, I check it daily. What is it currently saying? So yeah, September cut. I mean, if you add the probability, there's even a 16.4% chance of 2 cuts by September, by the way. So according to what I'm seeing on the CME group probabilities, should I share that? Let's share it again. This is why I try to do the OBS thing. It's smoother. It should be working better if I ever figure out how to make that. I might experiment with that today, just so this doesn't happen again. Anyway, so yeah, you can see for September, at least 1 cut, 62% chance of 1 cut, plus the 16% chance of 2 cuts. So you add those together, you have, 86% chance of at least one cut for September. Is the way that I see it, but still not any cut expected for July as of right now. This chart, by the way, is oftentimes a mess. Oh, look at that, 0.4% chance of a Fed hike next week. Is it next Thursday? Next Wednesday is the FOMC decision. Oh, shoot. Oh, I see. Okay. Do you think the debt levels are going to make yields go higher? Well, it's funny. Trump clearly wants to spend money. What president wouldn't want to spend money on stuff that they think is important and that they want to accomplish with the country, right? So he's on the side of spending, but his Treasury Secretary Bessent is not such a big fan of that. And he's one of the potential contestants for becoming the new Fed chair, by the way. I think there's a lot more hawkishness than people think. But debt levels, I mean, what's not priced in already, though? That's my question. Is that, okay, we all know what the debt level is. We all know that the cost of the interest payments on the U.S. debt is really high right now. We're seeing news about, the Senate's not accepting the spending bill because they don't want to keep raising the debt. So there is at least a little bit of pushback on the crazy spending spree that is unsustainable. It's an unsustainable path, and someone has to take care of it, and it's probably better sooner than later. And I don't know. I'm of the opinion that it'll happen sooner than other people think. I think rates are higher than they should be. As of today, the bond market's sort of agreeing with me. It's up. We're up now. But anyway, is there anything else to talk about? Really, no. The main thing, just to repeat, producer, the PPI softer than expected, and continued jobless claims is spiking. Now it's spiking to up. It's not like this is not. Okay, this one. Share. Okay, I'll share it one more time. This is not this is not a good sign, everybody. Imagine if we get another leg up the next week, the same trajectory. We add another 50,000 week after week after week, and what if it steepens from here? Is this really just a one-time pop-up and continued claims are just suddenly going to go back down? Yeah, maybe. I think it's important, again, to realize that we are at 4-year highs right now, specifically for this week. We haven't seen continued claims this high since 2021. Okay. Anyway, I'm really just repeating myself. Thank you for joining me this morning. I like doing this with a team of people instead of by myself, looking at these charts and pulling my hair out. At least I can do it in front of people. So yeah, thank you for watching. Thank you for all your support, the Robschild community down here. I'm planning to do a regular show later to go over what's going on in the markets when it happens. And that's all for today. And see you later, guys. Robschild.